Hello, good afternoon, everyone. This is Matt Braden from GPAR. Hope everybody's having a great day, hump day, I guess, Wednesday, and another gray day in the city of Philadelphia. And it looks like we have more rain on the way, unfortunately. But thank you very much for joining us today for this webinar. We have a great panel of guests lined up for you. But before we get into that, to our GPAR members, just want to make sure that you're aware of an upcoming agreement of sale webinar that we're going to have, and that will be Friday of next week, Friday, November 6th, I believe. I'm looking up at my calendar. Yes, Friday the 6th, 9 o'clock in the morning. Trent Pettis, one of our members, he's a big time contributor to our association. It's a 3-hour session. It's a great session, agreement of sale. It's for the seasoned, grizzled, old school veteran to the newbie. There is something there for everybody. Trent is a wonderful presenter. He takes your questions in real time. And when remember the days when we could actually do these things like in person, anytime Trent would be in the classroom doing agreement of sale, you would hear people laughing. So think about that. It's an engaging presentation, and it translates pretty well in this setting with Zoom. So I encourage you guys to attend that session. It will be time well spent. For those of you who are not GPAR members, just want to say a little bit about GPAR and who GPAR is. I'm from the professional staff. We have Summer Jha, who is the liaison to our diversity committee. And we have Donna LaPera, we have Cheryl Adams, and we have Charlotte Corman. The 5 of us comprise of the professional staff, and we serve 3,200 Realtor members who do work here in the city of Philadelphia. And we're all about promoting home ownership and making sure that home ownership is accessible to everybody and in all neighborhoods of our great city. We're run by our committees and our volunteers, and that's our tie-in here today. It's our diversity committee. They're part of co-hosting today's event. So with that, I would like to introduce one of our GPAR board members, as well as the chair of our diversity committee, and that's Anastasia Dewan. Good afternoon, Anastasia. Great to see you, and the floor and the mic is yours.
Good morning, everyone. Thank you, Matt. Just wanted to say welcome to everyone, and thank GPAR leadership, Matt and Summer, and the rest of the team for encouraging me and my co-chair, Annette Collier, to do this through diversity and encouraging our relationship with PMBR in light of our current climate of civil unrest and all things that come along with it. So thank you guys for encouraging us and for supporting us behind the scenes. And thank you, Annette, for being my right hand in this collaboration. So again, like Matt said, I'm Anastasia Dewan. I am with GPAR, Greater Philadelphia Association of Realtors. I am a board member, a director on the board of directors, and I am also chair of the diversity committee. We at GPAR, we are happy to continue the relationship with PMBR. We put on a great event last year at the Ritz-Carlton residence. Great turnout, great content. And we're so happy to partner with them again this year. Obviously, things are a little bit different because of COVID. So we were happy that we were still able to manage to get everybody together and be able to present this workshop to you guys. And so with that said, just thank you guys again for all the support behind the scenes. Thank you to everyone who is participating in this today. And thank you especially to Darlene and PMBR and our partners at Fulton for bringing this all together. And with that, I will turn it over to the president of the Philadelphia chapter of the Pennsylvania Metropolitan Board of Realtors, Darlene Meekins. Darlene.
Sorry,
we can hear
you couldn't
Darlene.
hear me. Hi. I'm sorry, I was muted. I was just saying it's nice to see everyone that was able to show up for this virtual workshop and that we could get together once again to collaborate on presenting some workshops to our constituents. I am the president of the Philadelphia Metropolitan Board of Realtists. We call ourselves Realtists because back in 1947, when our national chapter formed, they did not allow African Americans to be realtors. Now I can say today that I am both a realtist and a realtor. And so we advocate for democracy in housing. Our national chapter is the National Association of Real Estate Brokers. As I said, we advocate for democracy in housing. That would be for anyone. But we do pay particular attention to our communities. NAREB, N-A-R-E-B. I don't know, you might have seen some of the text or the virtual events that have occurred. We just yesterday had our release of our state of Black housing in America that went very well. And if you go out there, you can find what we call the Sheba Report. That is the 2020 State of Housing in Black America for those who are interested. So I just want to say welcome. I think it will be great information for you, so stay tuned. And with that, I am going to introduce our first person up for Fulton Bank. And her name is Jennifer Bauer. She is the Community Outreach Officer with Fulton Bank and has dedicated her entire career towards the positive impact of youth, adults, and the global community via social services, financial education, and consulting, nonprofit management, technical assistance, charitable grant making, and international development, both in Africa and Latin America. She is motivated to help others succeed as she recognizes that this also contributes to her own success in life, both great and small. One of her proudest social impact accomplishments is having partnered with the local financial institutions and corporations to educate close to 40,000 youth from grades 4 to 12 in the tri-state area in budgeting, banking, credit, and investments over a 6-year period with the Economic Empowerment nonprofit Operation Hope. So like, hands to you, Jennifer. That's amazing and awesome. In her current position, she is responsible for providing financial literacy education to the youth and adults, promoting positive and sustainable sustainable charitable grant making to local and nonprofit organizations. Jennifer holds a BA in International Affairs, a MA in Behavioral Science, and is fluent in Spanish and Portuguese. So with no further ado, I would like to introduce you to Ms. Jennifer Bauer.
Thank you. I hope everyone can hear me. Thank you so much, Darlene, for the very warm and kind introduction. I really appreciate it. Again, everyone, I'm Jennifer Bauer. I'm the Community Outreach Officer with Fulton Bank, and I'd like to definitely thank PMBR and GPAR once again for having us, here today. We certainly appreciate this opportunity and look forward to connecting with everyone here today. Today we will be talking about the Community Reinvestment Act and how this can help to support your efforts in the community as realtors. And we have Rob Hironimus, who is the CRA sales manager with Fulton Bank, and he oversees the lending goals and compliance data for our mortgage department across Fulton Bank's 5-state footprint. Julius Sharp, who will also be joining us today, is the Community Reinvestment Act loan officer with Fulton Bank as well, and he is affectionately known as the home ownership advocate. He provides numerous educational workshops about home ownership throughout the community, And he's also available to support your client's origination needs. So without further ado, I'm happy to turn this over to Rob Hironimus and Julius Sharp. Thank you very much.
Rob,
Rob, yeah.
are you there, Rob?
Can't hear you.
No, we can't,
Yeah,
Rob.
he's asking if we can hear him. They have some technical difficulty with audio.
Is everything looking good on our end, Matt and Summer, with Rob's audio?
Rob is the 717 number, right?
I
Correct.
believe so.
Yeah. Looks like he's trying to reconnect audio.
Hey, Rob, are you there? All right. Okay.
It looks like he's trying to reconnect to audio.
Okay, maybe while we're waiting on Rob to get started, can Julius jump in? And I know you guys had an order to what you were doing, but
Yeah,
can we segue?
not a problem at all. Do we, can everyone see his screen still? Because I know he was sharing his screen. Can we see that? Are we able to see Rob's screen?
He's not sharing the screen.
Yeah, we lost him altogether.
But I might be able to find your slide deck. Give me a moment.
Hello, Rob?
We apologize, guys, for the technical difficulties. If you could bear with us. So we did do a dry run on this and everything worked smoothly, but you know how the internet gremlins work.
Looks like he's on.
I mean, I know we have time restraint there. I mean, I could start speaking. Unfortunately, everyone can't see the information. If you guys would like.
I can't unmute. Can you hear me?
Yes.
Yes, we can hear you.
Oh, okay, great. Not sure what happened there. I was on the line. My phone was unmuted the whole time. But anyway, okay. Are we good?
Can you show your screen, please?
Can you share your screen,
Let's
Rob?
roll. Yep, happening right now. Here we go. Perfect.
Awesome. Thank you, guys.
And here we go. All right. Can everybody see my screen?
Yes, sir.
Perfect. Thank you. All right. Well, welcome everybody in, and thanks for this opportunity to have a discussion today about, you know, CRA, fair lending, the things that we're doing in the Philadelphia market and really across our 5-state geography. So I'm going to touch on a lot of information and kind of flip-flop back and forth between myself and Jen and Julius. So as already introduced, we have Jennifer Bauer, who's our Community Outreach Officer for the Philadelphia market. And to me, Jen's kind of like the person at the party that is introducing folks to one another, making connections, uncovering opportunities to benefit individuals at the party. So she is a real party animal. So if you get a chance to talk to Jen, just, it's a lot of fun. We have Julius Sharp, who is dedicated specifically is a specific loan officer role as a CRA loan officer that focuses on affordable lending, affordable housing, and is out there, doing hand-to-hand combat every day with customers and, trying to get things to go and have people become homeowners. And then as Jen had mentioned, I'm the CRA sales manager, affordable lending, bank and builder services manager. So it's quite a mouthful, but my role is to help out our sales managers, regional managers across the 5-state geography. And my focus is in affordable lending and affordable housing. So today, the objectives, there's a lot here, is to talk about CRA in the current and future market, talk about what is CRA and fair lending, why do lenders focus on CRA and fair lending. So I think, this is kind of, for those that are in the industry, it just puts another level or layer of understanding of, how lenders are evaluated, the standards that we're held to, what is our level of accountability, and why do we do what we do. And by the way, this is not just Fulton, this is everybody. And I want to do a little bit of a deep dive into how all of you on the line here today can do your own search to pull some information. Again, it's not something that you have to do, but you may find some interest. But I can tell you that Julius and others on our loan officer team are very familiar with what I'm going to show you a little bit later on, and they can do it for you. We're going to talk about CRA modernization briefly, but I want to cover that too, because there's some interesting concepts and some food for thought that people could leave the meeting with. Talk a little bit about what we are, Fulton Mortgage Company, our community outreach officers, our CRA loan officers, our partnerships with housing agencies. Want to show you all how you could identify housing agencies and steer people in the right direction to get purchase ready, to get that assistance, to get that help if they're not ready today. I'm going to touch on our partnership with Fannie Mae and Freddie Mac. We're going to talk a little bit about some grant programs, exclusive mortgage programs, a little bit about community land trust, and then I'm going to turn it over to Julius Sharp, and we're just going to go through kind of, and a lot of you probably know this, but maybe there'll be some gems that you pick up along the way that you can share with your potential customers about how to prepare for the home buying process. And we have just found time and time again that the more preparation that folks can do in advance to get ready for that journey, the better their experience will be. We're going to talk a little bit about mortgage programs, down payment and closing cost assistance, and then at the end, we're going to leave some time for some Q&A. So a lot to cover today, so I'm just going to go ahead and jump right into it. So, first of all, why offer CRA products and what is CRA? So CRA, the definition we have up on the screen here, it's the Community Reinvestment Act, and it's the federal government basically requires financial institutions to make sure that they are serving the needs of the communities of where we do business, with a specific focus on what is considered to be low to moderate income individuals and in low to moderate income geographies or neighborhoods. So we're held accountable to that to make sure that we're doing the right things. And if you don't do the right things, there could obviously be bad things that go along with that. Regulatory fines, bad PR, and just nobody wants to be known as that type of lender in a community. I'm sure you've all heard of various forms of discrimination, everything from redlining to just not serving the needs. So we make sure that we do that. So here on the screen here, why do we focus on CRA and fair lending? And just to provide a definition, I broke that down here for you, and we'll cover that in just a second. But as I had mentioned before, the reason we focus on it, number one, it's the right thing to do. And we have just found that by being integrated and having engagement with our communities, with individuals with our communities, that it helps further opportunities for everyone. And in the community, it builds stronger bonds. You know, there's so many things that were talked about before this meeting, you know, civil unrest. I mean, it's a very, very strange time. You have a very polarized political environment right now. You obviously have the Black Lives Matter movement. You have a lot of social injustice still happening today. And, you know, financial wherewithal and having an impact to be financially stable helps build these things over time and to make sure that people are treated equally and fairly. And again, it enhances our communities. So from a regulatory perspective, these are the 5 categories that a lender is evaluated. And this will make sense also a little bit more when I show you the maps here. You can see I have a link at the bottom. We're going to do that live on the screen. But we are judged by our percentage of comparison to our peer lenders. And it's all done by percentage. So in theory and concept, it should make it fair. So that way, if we originate 100 loans in one of these categories compared to somebody else who originated 1,000 loans in one of these categories, the percentage should really tell the story. And these peer comparisons usually adjust once a year, and they're usually about a year behind. So for example, just a few months ago, we received the 2019 peer data of all of our competitive lenders in every market that we have. And we are compared to that by percentage. And the breakdown is as follows. So you have lending in low or moderate income census tracts. So that's geography specific. Where is that property located? You have lending to low to moderate income individuals. So that's based upon the income that's placed on the application and what is their income and does it meet the criteria for low to moderate income? And I'm going to give you guys that number here for the Philadelphia market in just a minute. We are also compared against our peers for lending in majority minority census tracts. That's where the geography, where the minority percentage is 50% or higher. That's considered majority minority. Then it's lending to minorities, anyone non-Caucasian. And then there's a breakout group to that, which is lending to Hispanics. So all of this is updated, and we keep a close watch on this from our corporation standpoint monthly. We put out monthly reports that are all judging our performance based upon 2019 peer and how are we doing. And I can tell you that in the Philadelphia market, we are a peer leader with our competitive banks. So we are hitting all of these buckets that you see here. We are either meeting or exceeding peers in every one of these categories, which is great. So, and when we talk about, and I want to be really clear on this because we use these different terms kind of loosely, CRA and fair lending. But when I'm talking about a regulatory comparison, CRA is really focuses on that low to mod component, and fair lending is really in the majority, minority, and minorities component. So that they're kind of brother and sister there, CRA and fair lending. But the tool that we use, and I think you'll all find this interesting, is a map here. And this is a federal map. And give me a second here. Hopefully, can you all see my map?
I can see it, bro.
Okay, perfect. So this is the tool that we use. It's called ffiec.gov up here at the top. And this is a federal website, so anybody can use it. And you can search a property either by address in the toolbar up above, or you can identify particular geographies to know what is the information for that geography. And this is an interesting component, because you're going to see that as we talk about other things throughout the day, it'll make sense of, okay, that's why that program works that way, or that's why there's a grant that fits this need. There's reasons behind why guidelines and certain programs are the way they are, and a lot of it is based off of this. So if you come here to this user select track, and I'm just going to do this quickly, you can come over to the map, you can drag it, and you can zoom in to any particular geography. Let me just zoom in here to Philadelphia. And you'll notice that as we get closer, you're going to start seeing all of these blue shapes and blue grids. So what that means is on each one of these shapes or grids, the information for that census tract is the same. So we all know that the census this year just happened. Those are the folks that are going around with the clipboards gathering information. You could do it online. So this will be updated next year. So they usually update every 5 years. So it'll be interesting to see. But if you're looking for that specific information for any census tract, and as you can see here, you could drill right down to the street level. But if you select this box here, user select tract, you can click and put basically the blue dot where that census tract is, and the information is provided right here. So we click on this button right here, it's census demographic data, and it tells us one of the main fields, census tract income level. In this case, this geography is low. Our income limit is here, but we have to multiply that by 80%. So in Philadelphia, to be considered low or moderate income, that limit is $56,880. So that's this number right here divided by 80%, because you're at 80% of the area median income, which is this right here. And then if you're going to notice, the tract minority percentage is right here at the bottom as well. And this tract, the minority percentage is 97.36 or 38. So this just helps folks kind of identify those particular geographies. And you can go through here and check it out as you're moving through Philadelphia, what is considered low and moderate and what is considered majority minority. So it's very interesting to see. And I'm actually clicking around here. Sometimes you'll have, okay, here's one. So here's one over here. Whereas in this street right here, what is this? Trenton Avenue is literally a dividing line between a moderate census tract and a middle census tract. So that's important for some of the other things that we're going to cover. I'm going to come back to the presentation. I'll pause there for a second. Does anybody have any questions on that? Okay, so let's get into CRA modernization. So this is interesting. And by the way, I'm full disclosure here. I attended an MBA event, and this was part of their slide deck, and that was last week. So I just pulled these slides out and plopped them in here. So I'm not going to cover all these bullet points. But I just want to make a few comments about it, because CRA modernization is still a very hot topic, and there are still some things that are uncertain of exactly what it's going to look like. And that's what these next two slides show. Even though the rule technically took place October 1st, but there's still a ton of things here where the feds have failed to establish any sort of benchmark of exactly how we're evaluated. But here's something that's interesting, and I want to mention this. So some of you may know that in the past, Fannie Mae and Freddie Mac had a guideline on their Home Ready and Home Possible mortgage program where there was an income limit waiver if the property that a customer was purchasing was in a low or moderate income census tract. So the reason and the concept and the thinking behind that for many, many, many years was, hey, we have these geographies that are deemed low and moderate, and there's typically a lot of blight within those geographies, and we want to enrich those communities with folks that may have some money to go in, buy some properties, fix them up, and put money into that community. That was the thought. And by the way, for some programs still today, that's still the thought. And as you recall from earlier, it's how we're regulated as a lender still to this day. So in theory, that's a good thing, right? You're putting some money back into the community, you're revitalizing the community, you're fixing up the community. However, the negative impact from that is you hear others, so there's really two camps on this. One thinks that, hey, pumping money into these communities is good. And then the other camp says, hey, wait a minute, what's happening is you have folks coming into these geographies, they're using these programs to buy up properties in low to moderate income, they're fixing them up, artificially raising property values, and it is eliminating affordable housing for other folks. It's creating gentrification and, all the stuff that goes along with that. So interestingly enough, the feds, even though we're still regulated on it today, are saying we're eliminating that. So that is no longer going to be a measure for lenders. You no longer are measured against for your lending in LMI. So pretty interesting of all the things that are going on. And actually, we have something coming up here in November, which could change the course of all of this, the presidential election. So we really don't know what's going to happen. I could tell you, and you could see here right from the NBA, that the new ruling is widely unpopular. And you also have differences between what the OCC says, what FDIC says, and other federal organizations say. So basically, it's a big hot mess right now, and nobody knows what's happening. So just wanted to put that out there that we will see, but we do know that a change is coming. So that's a quick snapshot on CRA modernization. So what are we doing about it as Fulton Mortgage Company? What are we trying to provide benefits in our communities? Well, we have a commitment to fair and responsible banking. We have an initiative called Fulton Forward that focuses on workplace development, diversity and inclusion, home buying, grants, affordable lending, and different programs that support our communities. We operate in 5 states, DC. We have over 100 loan officers throughout our footprint. We have 14 dedicated CRA loan officers. Julius Sharp, who's on the line with us today, and Shantae Mears is another one of our CRA loan officers in our Philadelphia market. We have community outreach officers, Jennifer Bauer. And we have partnerships in our communities with various housing partners and an organization called Operation Hope. So Jennifer, if you don't mind, if you could jump in here and just talk a little bit about your role and what Operation Hope provides. And then I'm going to jump back in and talk about our housing agency partners and show everybody where they can find a list of those partners.
Sure. Thank you, Rob. I hope everyone can hear me. I've made sure that I'm unmuted. Yes, so I've worked as the community outreach officer with Fulton Bank now for a little over 3 years. And in this capacity, I work very closely with the Community Reinvestment Act, with the mortgage team, to find additional partnerships in the community, identify additional partnerships in the community, to support, housing education, as well as financial literacy education. So, as Robert shared, we have very solid partnerships with housing counseling agencies within the city of Philadelphia. Out of 26 accredited housing counseling agencies, we currently have partnerships with 13 of those 26 housing counseling agencies, whereby our mortgage team is out there providing first-time homebuyer workshops and identifying other ways that, we can, make sure that the community knows what it is that we're able to offer. So tax season is another big time when there's a lot of opportunity for community members to think about what they'd like to do with their refunds. We participate in invited tax clinic sites where we're providing education about, what we can offer in the community. In addition to that, our economic development initiatives focus very closely on small business partnerships throughout the city of Philadelphia, which includes technical assistance, charitable grant making, and any other way that we can, essentially provide education and support to small businesses so that they understand, how Fulton can support their needs, both via our Operation Hope partnership, as well as, our lending, products and programs. And so with our Operation Hope partnership, there's two components, of that partnership where we provide free small business education and technical assistance, via an 8-week small business boot camp, which is completely free to community members, helps the community put together, those that are interested, help them put together their business plan, receive free one-on-one counseling for as long as it's needed. And we also have a financial well-being coach who expressly provides free credit repair counseling to anyone that's interested in purchasing a home, but may not be quite ready or understand, what steps are needed in order to, get their credit score to where it needs to be. And again, all of these services are absolutely free. And, our Operation Hope team members work, with the community members and individuals for as long as it takes. So if it takes 1 year, if it takes 18 months, if it takes 2 years, our Operation Hope team is right there, helping, our clients to get them to where they are looking to go. In addition to that, any type of support, that nonprofit organizations are looking for that align with our Fulton Forward pillars, we also take a look at that as well. So charitable grant making initiatives and requests, those all also come to me as the community outreach officer. And, this is an opportunity for us to, get a better understanding of what is actually needed in the community and how, Fulton can potentially, provide that support, whether it's in the form of, grant making or in the form of, providing skills-based volunteers or other ways, that we can, establish a viable partnership. And so our Fulton Forward pillars, just quickly, includes, workforce development, financial literacy education, again, economic development with small business technical assistance, and of course, affordable housing. So if there's any questions or needs that you may have around that, I can certainly help. And as Robert shared earlier, I always try to connect, people to the right resources. So, if there's something that you may need and you're not quite sure where you might need to go, you can also feel free to reach out to me, and I would be more than happy to, point you in the right direction. So thank you, Rob.
Great. Thanks, Jen. Appreciate it. Yeah, and as Jen had mentioned, and I think this is a really key component for folks to get, we have a lot of customers who come out and they're thinking about purchasing a home, and we start the process of asking questions, fact-finding, exploratory conversations, and there's a lot of people who they may not be purchase ready today. And we really want to help them down that path to get them ready. So again, we do that with the partnership with our Operation Hope staff and our housing partners. We make financial contributions to these agencies, and we do have very good relationships with them. So, but as realtors and realtists, you can go out and you can search these agencies. A key factor is making sure that they're HUD approved. That's a really a big deal, because if you're sending them to these shops, and I don't even care if they take offense, because they're not the proper way. These folks that they're charging people money and they do credit manipulation, that's really not the proper way of getting people back on track. But if you go to these HUD approved agencies, you can use this link here, get this over, and it's Find a Housing Counselor. And if you're viewing the screen here, you can put in exactly the location. Let me just flip back over here to the presentation. I think the Philadelphia zip was 19102, right? Is that right? My memory serves me correctly. There you go.
Yeah.
So this link is embedded in the presentation, and yes, we will be sending the presentation out. So if you're looking for a housing counselor, you can put in the zip code, hit Find a Counselor. This is the CFPB's website, Consumer Financial Protection Bureau. And as you scroll down here, you will see the different agencies that are available for customers to go and get resources and get counseling and coaching. And we see a lot of our partners here listed on this site. As a matter of fact, right here is our Operation Hope facility that is inside our mortgage office at 1501 North Broad Street in Philadelphia. So great little research tool that you could send folks to, again, to help them prepare for the purchase and to become purchase ready. Let me flip back over here to the presentation, and we'll go on to the next slide. So along with everything we're doing, we have a fantastic relationship with our Fannie Mae and Freddie Mac partners. And the interesting thing is we're the perfect size for them to pilot some programs with. And you know, we're not a big Wells Fargo or Citi or Chase, and we're not a mom and pop bank. You know, we have coverage in 5 states, 22 billion in assets. So we're a pretty large Northeast regional lender. But with that being said, it enables us to partner and pilot programs. And, you know, I like to put this in here, and we're going to distribute this as well. This is a case study that Fannie Mae actually did on us, Fulton Mortgage Company, and all the things that we're doing within our communities. I know this is small, so we're going to send this out as well so you guys can all see it. And from the Freddie Mac standpoint, I do sit on the Affordable Housing Advisory Board for them as well. We meet multiple times throughout the year, and it really gives us a chance to have our voices heard. And interestingly enough, as a lender, there's a lot of things that we disagree with that Fannie Mae and Freddie Mac have put into place. And we're pretty vocal about it, and that gets our voices heard as well. So those are interesting conversations. But anyway, as far as lending programs, you know, we do it all. We do standard conventional lending. We do Home Ready Mortgage Plus, which is, again, going back to our relationship with Fannie, a variant off of their current Home Ready product. And the big things about that, and Julius may cover some of this as well, the real highlights to this program is there is no mortgage insurance on this product. It's a 97% financing product with no MI, and also no loan level pricing adjustment based on credit score, which that's huge, because we see a lot of lenders out there who they throw out some teaser rates, and then they start working with the customer. They go, well, you know, that was if you had your credit score was a 740, and that was if you had, you know, 6 months reserves in the bank. But we don't have those types of requirements. And on this program, 97% financing, no MI, no loan level pricing adjustment, which means if your rate is 3.25 and you have a 740 score, your rate is 3.25. If you got a 680 score, a 660 score, a 640 score, 620 score. This program actually goes down to a 620. But I will say that the customer would need some compensating factors for a 620 approval. So we also do FHA. We do USDA rural housing. We do a lot with PHSA and their programs, VA, and then our CRA lender portfolio product, which allows us a little bit more flexibility. It's an exclusive product here at a Fulton Mortgage Company. It's also a 97% financing program with no MI. And this does have the waiver still for somebody who's purchasing in a lower moderate income census tract. So that may change with CRA modernization, but as of now, that still stands. And the other great thing about this is we also have the ability to do a manual underwrite if the loan is being declined, if the customer meets certain criteria. And think about this in the sense of customers that don't necessarily have bad credit, they have limited credit history. So we can do some loans that other lenders can't do for those folks that have limited credit history, but perhaps have non-traditional trade lines. So you think about things that don't show on the credit report, like rent, cable, gas, electric, cell phone bills, Netflix account. We'll use that stuff to create kind of an alternative credit profile. And as long as we can provide a 12-month history, there's a pretty high likelihood we can get that loan done. So that's a really a great program as well. So again, as I covered here, we have our Homebuyer Advantage Plus program, our Home Ready program. We also participate in a grant that we sponsor, run it through Operation Hope. It's called CCAP, up to $2,500 in direct assistance. It's not a lien. And since we rolled out that program in 2017, we have administered over $5 million in direct assistance to consumers out there looking for that type of assistance. And we also have a tool where both customers and loan officers can go in and search for down payment and closing cost assistance as well, since we recognize that that's a key thing that prevents people from moving forward. So we're trying to get the word out about what we're doing. So we're doing this through our centers of influence. We're getting out there to realtors, realtor meetings. We're getting out there to our housing agency partners, and we're trying to share as much information as we can. And also, we do conduct regular homebuyer seminars. We do them once a month. And the focus on that, and Julius is going to cover that here in just a second, is really about the journey. It's about the process. It's about what does a lender look at. And I would recommend, for anybody on the phone to please join one of our seminars and, promote that to your customers, even if they use another lender. Of course, we'd love to see them come to us, but it helps them prepare and to understand what a lender looks for. So with that being said, I'm going to turn over the next slide here, and this kind of goes into a little bit about that home buyer seminar. I'm going to turn this over to Mr. Julius Sharp, and I have my bad joke for Julius every time that no matter where he goes or what he's wearing, he's always a sharp-dressed man. I couldn't resist, Julius. I'm sorry. I'll turn it over to you, sir.
Well, I appreciate it. I appreciate it very much. And I'm gonna need your help now, Rob, because obviously you're sharing the screen so as I go through the slides.
Yep,
and I
you got it.
real briefly, as Jen, and I appreciate it, Jen, she said home ownership advocate, because although I'm a loan officer and I've been in this business related for over 20 years, what prompted me to get back into this business as far as mortgage origination was really to try to ensure that as many people as possible be able to become homeowners, pure and simple. And the information that I share at seminars and entities such as this is really to make sure people have the right information to put them in the best situation. Although I do a lot of different loans, my focus is on CRA, low to moderate, folks who may have challenges, quite frankly, in terms of getting approved. And it's important to me that the realtors and as loan officers that we're working together, because there is a different challenge. It's a different timeline sometimes involved. And one of the parts I always stress that preparation is very important in terms of helping people be able to take advantage of the home ownership process. We know that we do live in a society that, quite frankly, we're dealing with a lot of social injustice. My point, though, is always to make sure that I call it back in sports, you want to have your game plan together, however, because you need to know what is the strategy of the team? What are people looking at when they're really evaluating you? And then we need to know that as realtors, as well as loan officers, because the name of the game, the score, that means to get that person in the house. So my game plan is always to make sure that we're giving the right information. So one of the things when we're talking about people going to slide 14, Rob, why should a person get pre-qualified? Because we talk to people all the time, hey, I want to buy a house. I want to buy a house. Well, there's a process in buying a home, and people need to know the information that's going to be expected, what the documents are going to be required in order to put them in a position to be considered for a mortgage. And one of the key things that to me is always important about this, because presentation is very, very important. You know, we live in that world now called the microwave world, where we can go online, submit applications, and, you know, people want to have an answer in 24 hours. But the point is, quite frankly, is that if you don't have a person on the other end, a loan officer on that front line, who he or she is not willing to take the time to really shape what you're supposed to have on the application, meaning you can get denied very simply by putting incorrect information or not knowing how to present it. And you find that often we see the studies where, hey, why does a certain amount of people get denied? Because quite frankly, no one's taking the time to let them know, quote, what you need to do to get approved. We get denials but we don't know what we need to get approved. So my role is to make sure that folks do understand that. And it's important, again, when I say people call I'm a big movie buff, the circle of trust. You know, and Meet the Fockers, it's like the circle of trust. So the loan officer, the realtor, the counselor, everyone has to know, hey, what are we doing to get client A successfully to the point of being able to get a mortgage? And it's a false sense out there. You hear people, for example, why should I give you this information? Well, the fact of the matter is, and obviously realtors and realtors know that, if the person is not pre-approved, you don't want to drive through Saturday showing houses. I call it window shopping. We want to know that a person firmly is pre-approved, someone's taking the time to dot the I's, cross the T's, and that customer needs to know, what type of money am I going to need? That's all part of that pre-qual. We talk to people every day, hey, I want to buy a $200,000 house, but then you get that seller shot like, well, this is what it's going to cost. And especially now where grant monies, we all know, have been removed, the grant options have been shortened, it's going to be more imperative than ever that individuals know exactly what they're doing. We got a short supply of homes, so it's important that we dot I's and cross T's up front. Now, that being said, when we talk in generalities, what does any bank look for? Yeah, again, of course, we want you to do business with Fulton Bank or loan officer. But the fact of the matter is, my goal is still to make sure people are getting the right information to know, I call it what's behind that curtain. Because we hear people discussing about, yes, there's racism, yes, there's prejudice, but there's certain things, and I'm here to tell you who've been doing this over 20 years, that one has to be able to have and know about in order to be considered for a mortgage. Because even the affordable programs that we'll discuss, even things, those in the city, PHA, Delaware, Jersey, there are still requirements even to get grant monies. So it's not an Oprah where everyone gets a car. We have to know, and our clients have to know, hey, what are institutions looking at when they consider me for a mortgage? And we call it the 3 C's. Number one is capacity. I keep it very simple. And we know that from individual-wise with family members when they are you going to be able to pay me back? So the bank is always going to look at the person's ability to repay the loan, considering their income stability, the debt that they're carrying, and their financial resources. And we're going to get into each one of these deep on the next page. Then we're going to have the credit. Your credit. Hey, do you have a history of paying entities, your credit obligations back? And that even goes back to the point Robin mentioned earlier about we had one of those programs where, quote, we call it alternative credit, where maybe a person doesn't have a certain amount of credit on their credit report. So we'll ask for alternative forms of credit. But that alternative form of credit that you produce, whether it's your car insurance, your PICO bill, your Netflix bill, still has to demonstrate that you are paying your obligations on time. And those people a lot of times, we talk to customers when they consider, quote, not important creditors. Well, I didn't pay Comcast because I didn't like their service. This is all part of your profile. People always talk about the credit score, which we'll get into, but I always emphasize to folks, it's really your profile. All this, it goes into making a decision on whether or not you are a good risk, and that's what it really comes down to, and being lent to. And then finally, collateral, because no matter how much I love that backyard and it's my perfect man cave, it really protects the consumer, quite frankly, having appraisals, which we all know, and the home inspection, to make sure that we're not getting burnt. So going a little further along in capacity, and I always share with folks, and I know a lot of you realtors know this, so I'm not talking like, hey, people not aware, but I know that when you get a small supply of properties, and we're all, let's face it, this is how we earn a living, it's still important that, you're just having a casual conversation with a customer that, hey, what is going to be expected? And people have to have that, I call it that mom, dad, realistic conversation that we all had as kids, that, hey, this is what's expected of you. It's important that you have a stable employment history. I tell folks, look, if you don't like your job, and what's the date? October 28th, and you're planning on buying a home, you might not want to like it for another 4 or 5 months. My point being that unless you're talking about a situation where that person is obviously getting promoted, maybe getting a better position in the same industry, ideally, this is the time to stay put because your goal is to get that home. And changing employers during that process, yes, it can have an impact, especially when you're hourly employed. And we know for the most part, when we're dealing with CRA type of customers, they are hourly employees, okay, our employees. And it's important that people have that conversation with a customer that, hey, it's important. Yes, they are going to look at if you had a job 6 months here, the boss didn't like me. You had another job 6 months, the boss didn't like me. Another job 6 months because it was too far. Yes, I'm just giving the layman's terms. These things are going to affect your ability to get a mortgage. Credit obligations, which you touched on. You know, it's not just your credit obligations. Are you paying them? We know about the age of credit makes a difference. How you manage the credit makes a difference. Customer who has high credit card balances, although they may be paying it on time, yes, they may be viewed as a higher risk because they are always at their maximum credit limit. So all banks are going to look at that as part of the evaluation. I always want to hit on student loans because even for a lot of realtors partners, hey, my customer has student loans. And this was important when we talk about having discussions with individuals, because the fact is different investors look at student loans differently, meaning simply FHA looks at a student loan and says, well, look, you have $100,000 of student loans. We don't care if it's deferred. We don't care if it's a forbearance. As far as we're concerned, that's $1,000 debt. Fannie Mae, on the other hand, if you have an income-based payment, okay, which a lot of people may be familiar with, now if you only pay $200 per month for that $100,000, you can use that $200. That's a big difference, being able to pop into someone's quote buying ability. And this what ties back into we're talking about why credit is so important, because regardless, when you have lenders, you hear people say, hey, this bank does loans as low as 5.8. Here's the point. The lower your credit, the less options you're going to have, and the more you're probably going to pay for the loan, pure and simple. Your debt to income ratio, everybody knows what's going out versus what's coming in. Now, here's a key thing for me, for a passion standpoint, that even when I'm talking to borrowers, and we know banks, quote, approve a borrower based on their gross income, but we know none of us get our gross income. So one of the things I always emphasize to a client, because the game is not just to get individuals in the homes, but to keep them in homes, that, hey, let's start looking at giving folks information like, well, hey, look, now this is your net income, okay? And I know, because everyone's eyes bigger than the stomach, but one of the things that does cause difficulty, foreclosures, loss of property, is that we get approved, again, by lending institutions, technically, but we overlook the fact that, hey, I'm really living borderline because I'm getting a house based on some money I don't get in my hand. And finally, talking about assets, because again, when we have all these grant programs, which we've seen occur, there's been a change of focus since, let's say, August when Philly First Home left, July when First Front Door left, because unfortunately, sometimes it puts in the consumer head that, hey, I don't have to save money. There's some grant money that's going to be and allow me to get into a home. Yes, there's grant money, but the fact of the matter is, well, your assets, your savings, what you bring to the table can really have an impact on whether or not you get approved for a mortgage. So bottom line is, whether they have $20,000 in grant money, if we don't get into that financial management part that, hey, I still need to save some money, you may not qualify for the grant money because you're not going to qualify for a mortgage. Okay. And a lot of these grant programs, quite frankly, they've changed their way of giving out money. For example, you maybe can't use the money for down payment. So If you have to put 3.5% down, I'm just using as a mathematical example, on a $100,000 house, that's $3,500. If you have $2,000 saved, you don't even have the money, quote, to put down the down payment, let alone the upfront cost of appraisals and home inspections and things. So again, it's about letting the customer know, hey, what is going to be expected of me. Next thing, as we already said, is credit, which we touched on. I'm speeding because I know we got a time limit. The credit scores, okay? Our programs require at least a 620 score to be considered. And I always emphasize the word consider, because again, as consumers, we get misinformation. You know, you have individuals that would figure because, hey, I've got a credit score of 780, I automatically get a mortgage. Well, quite frankly, you may not automatically qualify. Okay. Again, we're talking about how your credit, that previous slide showed, how's that credit situated. So all this is emphasizing for a customer, hopefully, to be able to have an honest dialogue with a loan officer. Now, one thing, and it's not a bragging part, but I do know one thing that we do differently, is that we're having a conversation with a customer on realistically, okay, if you're not ready now, what do you need to do to get ready? And there's a lot of scare tactics, because you have customers say, well, hey, I don't want to pull my credit because it's a hard credit pool. And yeah, if you pull my credit, it's going to mess me up. I can't get it out. Again, I always keep it kind of simple. If your credit is good Friday and I pull your credit Monday and all of a sudden it's bad, that means you were borderline already. And that's why we have to tell, especially our CRA clients, emphasize it's important, more so now, because one thing about the pandemic, all lenders across the board started changing their credit parameters. So that 620 now is more challenging to get that person approved. It's not, I'm not talking about fair or incorrectness about it, but again, it's letting people know this is where we are at now. And if we don't let folks know where we're at and what's expected, and we know in the Philadelphia area, most metropolitan area, whether it's Jersey or Delaware, we're not going to be able to take care of, quote, getting people into houses, because this is not fantasy house. Okay, this is realistic, and we got a small supply. We see what's happening in our metropolitan areas, and our people need to know what they need to do to be able to take advantage of these opportunities. Coming to a close about documents, because again, it is big on documents. I tell folks, look, it's homework, it's legwork. Your clients are going to be asked more questions than they ever been asked before. And I'll be frank, why are they asking for this? Why are they asking for that? One of the things I grew up with, thou who has the goal is going to make certain moves. So we have to have our customers mentally prepared to say, hey, look, this is what you're going to need. It's not, well, can I give this instead of that? Because these are the little idiosyncrasies that can cause a person to get approved or not approved. And we know that when you're looking at houses, it's a small supply, okay? You have to be able to have a strong offer. You have seller realtors now will call me as a loan officer really prime, because they want to know, hey, has this person supplied these returns? In other words, have they supplied pay stubs? Because when they take that house off the market, you guys already know, they want to know, hey, we've got a definite bar, barring some maybe act of God, that you won't be able to go through. And it's not a difficult process. Yes, it can be challenging, because no one wants to come home and have to go in their closet and get documents. But again, it's about having folks prepared, knowing the truth, so that, hey, because regardless, again, of all the programs, if you're not prepared, it's like having what they call opportunities. If you're not prepared for the opportunity, we will continue to have more people not be able to take advantage of the home buyer process. And Rob, you can step on in, sir.
All right, fantastic. Thank you, Julius. Yeah, we covered a lot there. So, and just I saw a couple of the questions coming in into the chat box. Yeah, we do plan to send out this slide deck to everybody. And also the slides that we're going through here are all slides from our home buyer seminar. So again, we do them virtually. We post them out there on Eventbrite. We have digital invites that you can share with your customers. And again, our point is to try to educate customers about that process. So of course, we put a little Fulton spin on it at the end. But really, this is what we talk about, is the entire process and what does a lender look for. So just a few other quick slides here. I'm going to go through this quickly so we can open up for some Q&A. We obviously take a look at collateral, big deal. You wouldn't really think about it, but you have property condition, property type, and exactly what does a lender look for in an appraisal. And then we talk about inspections too, because that can open up some cans of worms sometimes. Documentation, like we had talked about before, trying to have the customer prepare in advance, things that they should do in advance and things they should not do during the process. And we've seen it all. I mean, customers all of a sudden just boom, $5,000 shows up in their account. Well, where did that come from? Or like, hey, you know what? I'm buying a new house. I need to go out and buy some new furniture, and they rack up, $3,000-4,000 and on a credit card to buy some furniture for when they move. Don't do that. Don't buy a new car because the house you're getting has a garage. So we really try to guide them through that course. And trust me, we have nightmare stories. So again, going to the presentation to the customer, we try to talk to them about the steps and the process so they all understand all the moving components. You obviously have your title work, you have your appraisal, you have offer and acceptance. Things could happen along the way. I would say in today's environment, and this is my opinion and my opinion only, that a rush closing today is about 30 days. The normal settlement's about 45 days. And if you want to give everybody a little bit of extra breathing room, make it about 60 days. I can tell you that as a lender, as Fulton, we have closed by the end of September what we closed for the entire year last year. Their capacity is blown out of the water. And it's very trying. Now we do see a decline projected into 2021, but a lot of that is the refi stuff, which is good because we are a purchase mortgage company. That's what we specialize in, but flooded with refis this year. So again, just summarizing here, we have a ton of mortgage products. Just touching on this quick, we do jumbo fix, we do construction perm. We have a fantastic medical professional program that we have some loan officers here just for that. Our portfolio Home Buyer Advantage Plus, our variants with Home Ready, and we have another exclusive program that we've been working on with Fannie Mae and Freddie Mac now for about a year and a half. That's going to launch, and here it is, Julius. You're even hearing this for the first time. It's going to launch February 1st, 2021. So I'm just going to drop that little breadcrumb right now, but it's going to be a fantastic program. I think you guys will all love it. So in the slide deck, there is some details about some of the exclusive programs that we have. In the interest of time, I'm not going to get into it so deep. Fulton Forward, Jen touched on this. I touched on this. Down payment closing cost assistance. That is one of the things that we focus on is the utilization of grants. Now that we're approaching the end of the year, the grant programs are starting to dry up, so it does become more challenging, but we do our best to try to connect customers with those organizations that are still providing grants. Again, Fulton, we are funding the grant through Operation Hope called CCAP. It's $2,500, but it can help. And that's what closing cost CCAP here broken down. So this will be in your presentation that you can see how that grant is broken down, how we can layer these grants when they are available. And literally, we've had customers come to settlement with no money out of pocket other than perhaps paying for their appraisal or an earnest money deposit up front. So with that, I'm going to leave. We have about 19 minutes. Yes.
Right. Insert one thing right quick also, just so everyone on the phone call it. There are still grant programs available besides the $2,500. You also have Pennsylvania House of Finance Agency, which requires a score of 60. That's why I was stressing about credit. And we also are affiliated with another organization, Neighborhood Housing Services, that also provides closing cost assistance monies in the form of a second mortgage. And so there are still some options available, and all of these entities, I always stress, have their own requirements. So it is a two-part, it's getting pre-approved for the mortgage, but also getting pre-approved for the closing cost assistance programs that are available. And that's why it's important to have those intimate conversations so the customers know both.
Yeah, great point. And you know, Julius, just one other thing on top of that, just so everybody knows, and this becomes a challenging conversation with customers sometimes. And just let me be really clear on this. Sometimes you can have a customer that for face value will qualify for a grant program. But then when you add that into the entire loan scenario and the loan profile, the customer's profile, DU, which is desktop underwriting through Fannie Mae, or LPA, which is Loan Prospect Advisor through Freddie Mac, may not, for lack of a better word, like that profile of the customer and using all the grants. And it could perhaps lead to us not being able to get that customer approved. So another alternative then would be Home Buyer Advantage Plus. So going back to that, our portfolio product, we have an option. But I like to say that because, you know, going back to our voices being heard by Fannie and Freddie, I disagree with them and how they interpret grant programs, because they treat them differently than perhaps an asset or a gift. But that's another story for another day. But I've been pretty vocal about that. So anyway, let's open it up to some questions. I saw a ton of questions in the chat box. Happy to answer them, or if we want to open up the lines, or how would we like to do it? I'll turn it over to the host.
Yes, this is Darlene. We do have a number of questions, and I'm just going to go ahead and get started, but I do want to thank all of the presenters. I thought the content was wonderful, and you've already answered the question concerning the slides. So the first question I have, I'm going to pose to Rob, I guess. Either one, Rob or Julius. The question is, what is the difference between gentrification and revitalization? And what is the role of the CRA in creating positive outcomes for the community development?
Great question.
Well,
I'd love to take a crack at it after the presenters.
Who is that?
If I could say this, certain things as far as lending is out of the control. When I always focus on what are going to be requirements, wherever you're purchasing a home, okay, it's important that we be able to qualify. So when we talk about gentrification and we're talking about property values, let's be honest, maybe going up, this goes back to the important part of our credit worthiness, knowing our assets, because here's the other part. One thing still about in our area, when we talk about low to moderate, as Rob touched on earlier, it may change in the near future. You still have some of these properties that are coming up that still are considered to be in a low to moderate area. See, the qualifications from a credit standpoint is not going to change whether, quote, you want to call it gentrification or reinvestment. You still have to be able to qualify to purchase a home. Now, the politics of the reinvestment, and I try to stay away from that because I try to deal with what is on the table. And it's like, again, what do you realistically have to be prepared for? The game changes. We know that's how life is in this country that we live in. And the fact of the matter is we just need to know what tools or strategies we need to have in order to still be part of the game.
All right, thank you. I don't think anyone really answered the difference between gentrification and revitalization. Anyone want to take a stab at that?
Yes, I'd like to take a stab at that, if I may. My name is Joe Quinones. I'm actually founder of the Bauer Realty Group, which is a socially conscious brokerage, real estate investment management firm. And for us, the difference between gentrification and revitalization is with gentrification inherent within it is a form of exploitation of the indigenous inhabitants of a neighborhood where you roll in, You try to buy them out at the lowest possible price, and then develop what is basically their birthright and push them out of their own neighborhood, and then ultimately change the cultural character of that neighborhood. With revitalization, it talks more about a partnership between the neighborhood and, let's say, the developer that's coming in, where instead of buying them out, perhaps you form a partnership with them where you say, hey, in essence, you have land, I have capital and execution capability. Why don't you invest your land into this LLC? We'll develop it in partnership. Your land contribution will be valued at its fair market value. That becomes your equity participation. And so right now, this land or this house that you bought for maybe $60,000 30 years ago, it'll be a $200,000 contribution to a $6 million project. Then one might say, okay, well, that's great. You formed that partnership, but I guess you're going to develop the neighborhood and change the cultural character. Not necessarily, because although we as realtors know that we can't have housing discrimination where you hang a sign out and say only people that have this demographic profile can come into this neighborhood. However, if you, like many other communities, think Chinatown, think Little Italy, think the Jewish enclaves we see in different cities, where you can tell as soon as you enter the neighborhood, oh, okay, got it. This space has been created for this particular group. And how do they achieve that?
Yep.
They just basically target market to the group that they wish to form community with. So if developers and investors took this approach to collaboratively developing communities, you move from gentrification, evil, to revitalization. Welcome.
All right, thank you, Joe.
Thank you, Joe. Thank you for that contribution. Just going forward, for the sake of time, if we could have the questions be posed to and answered by the presenters, that would help us stay on track.
Sure, and this is Rob. Just one or two more really quick comments, and then we can move on to another question. Just to piggyback off of that, and Joe, that was actually a wonderful answer. And I would say too that our housing agency partners in each market, they can help play a vital role and interaction with the city to help identify properties that could perhaps be revitalized through either state or federal funds. And then they deem those within the geography to be sold to low to moderate income individuals. So again, giving people that are in that community the opportunity to purchase homes. So you see this happening. And by the way, Philadelphia is really starting to ramp up compared to some of the other markets with community land trusts. There are some markets where that is a big thing that's happening right now, as organizations are stepping up. They're creating community land trusts. They're taking blighted properties, they're revitalizing them, but they must be sold to individuals that are low to moderate income. So we've actually partnered with a project in Philadelphia. It's called the Mamie Nichols Project. We were there last year for their groundbreaking, and we can originate loans for that particular project. And it's one of the conversations we're having with both Fannie and Freddie about mortgage programs with them, but we can originate those loans with our portfolio product. So I agree with what everybody's saying, because there are some horror stories. I mean, I talked to some folks that in the Atlanta market, and they physically say there is no affordable housing in Atlanta anymore for anybody. So that's what you don't want to get to.
Yes, thank you. Anastasia, you want to go with the question? Anastasia, you're on mute.
Sorry about that. I'm just trying to go through the questions that we have here in the chat box, and it looks like pretty much all the questions were answered, except for I saw a few that were not related to the topic that we just that you just touched on, but I think it was important. A few people were asking, what states do you lend in? Are you lending in all 50 states or not? Another question is,
Great.
can you, I'm sorry, go ahead.
Oh, I was going to say, I can answer that real quick. So we lend in Pennsylvania, Maryland, Delaware, New Jersey, Virginia, and DC. I apologize. I had that on my slide, but I think I just said 5 states and moved on, so my fault.
Yes.
Thank you. And then another was, can you lend on non-warrantable condos? And what would the down payment percentage need to be?
Ah, fantastic question. So interesting that it came up. So, and I do believe, do I even have that in the slide? We can. So we do have our portfolio product is designed. Do I have that in there as a highlight? No, I do not. Okay, my fault again. So on our Homebuyer Advantage Plus program, we can do financing on non-warrantable condos. However, it is by a case-by-case basis. So typically we'll get the condo questionnaire. We'll send that up to our underwriting department. We find out what's the story with why it's non-warrantable. And as long as if it's a occupancy issue, that's okay. If they're in some sort of legal battle, probably not. So it is case-by-case. We do review it. Please allow a little bit more time, but that would be a customer that we would take Homebuyer Advantage Plus our portfolio product.
Thank you. There was a question, any conventional loans at 3%?
Yes.
Yes. So that
the program requires a minimum of 3% down. That's with the regular conventional. That's with the Fannie Mae Home Ready. That's with the Home Buyer Advantage, which still falls under the menu of Fannie Mae. So if it's conventional mortgage, minimum payment of 3%, and FHA 3.5%.
Does that still include mortgage insurance?
Well, regular conventional does include private mortgage insurance. It's still 3% down. And as we touched on earlier, the Fannie Mae Home Ready and the Home Buyer Advantage Plus product, 3%, and that's no private mortgage insurance.
Thank you. To you and
Awesome.
Ms. Bauer, do you have any relationships with Philadelphia CDCs?
Yes, sir. Yes, we do, Mr. Williams. Thank you so much for your question. We are partnered up with ASE Community Development Corporation. We're also partnered up with Southwest Community Development Corporation. And we also, we're members of the Philadelphia Association of Community Development Corporations, which essentially is a membership organization for all of the local CDCs. And we've been a member there for at least the last 3 years, I believe. I believe those are the top 3 community development corporations, in addition to New Kensington Community Development Corporation as well. So yes, we do. Thank you for asking.
Mm-hmm.
Thank you, Mr. Williams, and thank you, Jennifer. Listen, guys, we could go on and on and on. For the sake of time, we do have to cut it short. Jennifer, if you would provide your contact information and contact information for everyone else on the panel, that would be great. And
sure,
if you guys want to take note of that, and I know that you'll be sending out the slideshow to everyone, the slide deck to everyone who requested as well. So thank you guys for that. Wanted to give Darlene opportunity to leave any closing remarks.
Yeah, I thought maybe we could have one more question. We have 4 minutes left, but
So go ahead, we can do it.
All right, let's squeeze one more in.
okay. And you've kind of went through this, but I think it's something that we could still ask and reiterate. Do you finance development in underserved communities being developed by African Americans? I think the question to that is yes, but.
Yes.
Yeah.
So, and by the way, just throwing this out there, if there is a project, we have a separate department of Fulton that kind of does things on a larger scale to help provide the financing for that. So I don't know if that answers the question, but we've definitely done things from a project from, the initial groundbreaking, financing the project through Fulton Bank. And then, we have a partnership with them kind of at the end to follow up with the loans for customers.
Great. Can I get one more in?
Yeah.
So our national
Our
organization,
behind the scenes staff is gonna kill us, but one more.
NAREB recently announced that since the pandemic, home ownership in the Black community dropped from 47% to 46%. Freddie Mac indicated that there are 3 million Black home buyers that are ready to buy. Based on the current economy, do you think that the number may continue to drop? If so, what do you think is needed to keep Black homeowners on the upswing?
So I can answer that, and I would say, that's what we are facing every single day. I think everybody had to adapt rather quickly. Obviously we're doing things in a virtual environment. A lot of our housing agency partners, they're not going into their offices anymore. Things are done virtually. And I think that everybody starts to try to get the resources out in front of people. A lot of people are using cell phones, iPads, just technology to be able to communicate. So there is opportunities out there, there is help out there. And that's what we try to accomplish with our home buyer seminars that we conduct monthly. And just saying, hey, even though the world is different, we can still do this together, and we have the tools to be able to help you. And we want to continue to support that in all of our communities.
Well, I want to say thank you. Jennifer, you can jump in there. I see you were about to say something. Jennifer? Can't hear.
Oh, I'm so sorry. Can you hear me now? My apologies.
Yes.
Well, I'd like to say thank you again so much to GPAR and to PMPR for having, us here today. We greatly appreciate the opportunity. And, I look forward to hearing from everyone. I did put my contact information, my email and my cell phone number in the chat box. So hopefully everyone's had a chance, to see that. And again, whatever questions you may have, if you're not quite sure, whether you're looking to connect with our mortgage team or our community development lending team or our commercial team, whatever the case may be, I'd be happy to make those, connections. And so again, thank you very, very much. We are very, very appreciative of this opportunity that's been extended to us today. Thank you.
Yes, thank you from PMBR, GPAR. We're right up on 229. I just want to say that this is going to be a series. Our next series coming up on the 9th of November. Look for the flyer. Everybody be safe, be healthy, keep your immune systems up. And once again, thank you for coming.
Thank you, guys. Yes, and I also wanted to thank all the presenters for the valuable information that you provided, and thank you for the follow-up and being willing to stay connected with the people who took the time out to be here today. Especially thank you to GPAR leadership and staff for supporting us and encouraging us. Thank you to Pennsylvania Association of Realtors, because they are providing some dollars that are going to offset the production of the series that we are presenting to you guys. So stay tuned for more good content. And thank you, PMBR and Darlene, for still being willing to collaborate with us so that we present good content to you guys and to the benefit of our member base, and which ultimately is going to benefit our community. And thank you, Annette, and my entire diversity committee for continuing the work and putting out good things like this. And to everyone who took time out to participate live, and to everybody who's planning on watching the rerun that couldn't make it live. Thank you, thank you, thank you. And Matt, do we have anything that we need to close with?
Quick question, if I could.
Yes.
I see some email, and you guys do have our contact information to share with everyone, because I see a couple questions there about the contact information.
Yes.
Okay.
Matt, Summer?
We're good. We're good.
Good?
Yeah.
Thank you, everyone.
Thank you.
Have a great day.
Have a beautiful
Thank
day.
you. I appreciate it.